Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
The concerns in the Middle East, what seems to be an escalation, although I do feel like many would feel like the conversations and concerns over Middle East escalation are a bit of a thing of the past. We are awaiting, of course, an update from the White House, and as soon as that happens, we will take you there live. In the meantime, we want to get more on the situation in the Middle East. With us is Bloomberg News reporter Dan Williams. He is with us from Israel, along with retired Major General Mastin Robeson. He is Geopolitical Intelligence Advisor at the veteran-owned and operated investment bank Academy Securities Advisory Board. General Robeson is in Greenville, South Carolina. Dan, we do want to start with you. Tell us the latest. Tell us what you've seen. Give us an update.
Well, extraordinary developments over the last hour or so. A major salvo of missiles from Iran set off sirens pretty much throughout Israel. And keep in mind that Israel's been on a war footing for almost a year since the October 7th attack by Hamas from Gaza that triggered the war there, a war that quickly spilled into a multi-front conflict, and now is shaping up to be a direct war between Israel and Iran. So I heard something like 25 explosions of interceptions around Jerusalem. There are similar events in and around Tel Aviv. Right now, it's not quite clear if there are casualties. There is some damage from missile strikes or from the strikes of debris from missile interceptions. This all came in conjunction with what appears to have been a Palestinian gun attack, a mass shooting by two gunmen in Jaffa that killed 4 people and wounded at least 3 others. So an extraordinary turn of events, given that had we been speaking just an hour or two ago, we'd be discussing Israel's larger scale incursions into Lebanese territory that began just about 20 hours ago, and pretty much turned that into a new ground campaign for the Israelis.
Dan, certainly glad to see that you're safe and hear from you right now. There's not a lot of historical precedent for this, but in this year, there actually is. It's the second direct attack by Tehran on Israel so far this year. Just from what you understand about this attack versus what we saw back in April, compare the two. How is this one similar? How is this one different?
Well, back in April, Iran fired around 300 projectiles in total. Around a third of them were ballistic missiles. The other 2/3 were drones or cruise missiles. Those have smaller payloads, very small payloads in the case of drones. I'm referring to the amount of explosives they carry. They also fly quite slowly. A drone can take 9 hours to reach Israel from Iran. A cruise missile could take 2 hours. When it comes to ballistic missiles, the flight time is something like 10 or 12 minutes. And the payload can be as much as half a ton of high explosive. What appears to have happened now is the Iranians fired only ballistic missiles. I'm hearing something in the order of 181. That's the latest figure we're hearing from the Israeli side. That is not to be, that hasn't been confirmed yet. But clearly there is an attempt here to overwhelm the Israeli defense systems. Israel has very good air defenses, but they're very expensive. Presumably they can be stretched with enough of a volley when fired against them. And definitely this was an extended case of sirens and interceptions. The whole event lasted something like half an hour, 40 minutes. So certainly dramatic, certainly jarring for many Israelis. Israel is now talking about inevitable retaliation, though the official line is that it will decide when and how, so it may not be immediate. But certainly this is a dramatic development, any way you look at it.
General Robeson, I want to bring you into it. If you are an ally of Iran, if you're an ally of Israel, how are you thinking about what happens next? How are you militarily either supporting or preparing to support what's next?
Yeah, great question. I think if I'm a supporter of Iran, I'm saying we knew they had to do something to save face. Given the failure in April, and that was actually, I agree with what Dan said, but I think the earlier one was more complex and it took more systems to knock them out. But we had more assets over there this time. We'd pushed 15Es and F-16s and 2 carrier battle groups, and So there's a fair amount of support over there right now from an Israeli standpoint to help be defensive of Iran's attack. You've got to believe that Iran had low confidence that they were going to be that successful, given we've made no secret to the amount of reinforcement we sent over. And they certainly were hugely unsuccessful on the first go round back in April. So I'm not sure that this is viewed much more than, okay, this is the status quo. We knew it was going to happen. We knew Iran had to do something. Will Israel immediately respond? Probably not. Will they take their time? Probably. Want to have the best effect they can without ramping it up. But I still think Israel is really more concerned with Hezbollah and what's going on there than with Iran and what's going on with the attacks from Iran.
Well, General, does this attack from Iran, in your view, get Israel closer to the end of this war that has gone on at this point for close to a year?
No, because I see the war has never been with Iran. It's been with proxies. Iran is fighting this thing through its proxies and was pretty effective up until the last week. But the devastation that Israel had on Iran's primary proxy, Hezbollah, that was built expressly to be able to attack Israel if Israel ever launched against the Iranian nuclear capabilities, it has completely been dismantled from a command and control architecture standpoint. I mean, there's still 180,000 warriors out there that could be a real pain in the neck for Israel. But what they demonstrated this past week of the ability to be so precise, such precision, know exactly when and where and how people were, is really just, I mean, it's amazing the way they pull that off. That can't be lost on Iran that, wow, if Hezbollah was that infiltrated, are we more infiltrated than we think? So I think Israel, based on what's happened the last week, has a huge uptick in its psychological advantage in this conflict right now, because they've really got Hezbollah on their heels.
Yeah.
It's just a function of what they do next.
Dan, what is, gosh, not a great word, victory for Israel in all of this? Because it's interesting that here we are almost a year in from Hamas, the attack on Israel, and I almost feel like we don't really talk about the hostages much anymore, which I thought was originally the end game to get everybody back home. So having said that, what is the win or victory for Israel in this? Ultimately.
Well, Israel has laid out three very simple war goals. One of them, as you alluded to, is the recovery of all hostages from Gaza. It's hard to know what's going on. We know that none have been recovered recently. We don't know to what extent Israeli forces, intelligence services on the ground are working on locating them, maybe planning rescues, maybe paying ransoms, maybe paying prizes for individual actors who might be able to deliver them on a private basis. We don't know this, but clearly there have been no public developments there. A second war goal is to defeat Hamas and basically remove the threat posed from Gaza to Israel. That appears to be well on its way. It's significant that even though Israel has been pummeling Hezbollah, as the general described in recent weeks, there's been very little in the way of Hamas supporting fire from Gaza. It appears because Hamas simply lacks the rockets or the capability. It would appear Israel is on the way to achieving that. The third goal is the return of some 60,000 Israelis from the north of the country who were displaced by by Hezbollah fire from October 8th. The safe return of those people home. Now that is trickier, and it appears that the Israelis are ramping up efforts to achieve that goal, specifically by decapitating the Hezbollah leadership, degrading the weaponry, and as of last night, moving in physically a fairly large number of ground troops to physically dislodge what remains of Hezbollah fighters. These are frontline fighters. They're called the Radwan Force, considered elite, from southern Lebanon, from towns and villages facing northern Israel, the sort of place where if Hezbollah had wanted to, they could stage an October 7th-like attack on northern Israel. Indeed, the Israelis say that when Hamas waged that attack, they effectively stole the thunder from Hezbollah. Hezbollah had been publicly talking about such an attack, and now that would appear to be potentially obsolete, but Israel doesn't consider it that way. It intends to go in to capture, kill any Hezbollah members it finds, to uproot their infrastructure in the south, to blow up tunnels, fill them up with cement. And they're saying that could take a number of weeks. But they also seem pretty assured that once that happens, residents of the north would be able to return to their homes, potentially as soon as the end of the year. So it would appear there is now a timeline being firmed up. Obviously, the one big question out of those three goals is how and when and in what condition those around 100 hostages might be recovered from the Gaza Strip.
Dan, you're joining us from Jerusalem. Israel now staging a multi-front war effort. Help us understand, or how would you characterize the support from Israelis for what the government and the IDF are doing?
In general, polls have shown, certainly in the opening days of this war, wall-to-wall support for the war, for the military, and that has eroded at the edges, more or less, when respondents are asked about the functioning of the government, about Prime Minister Netanyahu. He has a very robust opposition that's accusing him of foot-dragging on the hostage issue. There are allegations he may be drawing out the war because of his political problems, his legal problems. He, of course, denies this. I think it would be fair to say that as of last week, in fact, there was one poll on Israel's leading TV news channel, found a significant rise in support for him, given the way he, his government, his security services have pulled off a really remarkable cascade of offensive actions against Hezbollah, including the famous beeper sabotage, the walkie-talkie sabotage, though Israel has yet to formally claim responsibility, the assassinations of high-level Hezbollah leaders, including the Hezbollah leader just on Friday when Netanyahu was giving a speech at the UN General Assembly. It would appear now, again, there is a poll indicating that, again, Israeli support for this war is on the rise. As the general noted, there is a sense that Israel has retaken the initiative here. It's given a psychological buoyancy to many Israelis. Clearly, an event like tonight's missile salvo will have shaken many Israelis. But given that they're facing foes with whom there really is no compromise, Iran and its proxies, including Hamas and Hezbollah, are ideologically committed to seeing Israel destroyed. So it's not as if there is really a diplomatic path for a long-term resolution. There's no such thing as peace talks. At best, there would be ceasefire talks. And I think many Israelis have tired of ceasefires that prove short-lived and potentially give the advantage to their enemies. So I would say that morale remains strong. Obviously, this is totally unprecedented. Israelis are comparing this war only to the 1948 war, when Israel was founded against the odds, against numerically superior and often better armed enemies. So they see this as the long haul, but I think public support does remain strong behind the military and behind seeing this through.
If you're just joining us, just to rehash the headlines, Iran launching an attack on Israel using ballistic missiles. Israel saying that many missiles were intercepted, no known injuries. The strike, the second direct attack by Tehran on Israel this year. We are talking with Bloomberg News reporter Dan Williams. He is in Israel. Also with us, retired Major General Mastin, Robeson, Geopolitical Intelligence Advisor at Academy Securities Advisory Board. General, I want to bring you back into the conversation. I am curious about the Middle East. We lump it all together. There are many moving parts, different allies, different relationships. The New York Times over the weekend talking a lot about the axis of resistance in the Middle East, the Iranian-backed network of militias in the Middle East known as the axis of resistance, but basically saying that the response that they have done has been minimal or feeble. That was the Times words. I do wonder, what are the conversations that are likely going on across the region, between the United States and across the region, Europe and across the region? What's likely going on right now?
Yeah, I think it's further solidifying what began, over the past 3-4 years, 5 years of the Middle East really being the fear factor that is the number one case for all Middle Eastern countries, with the exception of Syria and Iran, is Iran. Nobody, there are worse scenarios that Iran, in essence, invades. You've got, the difference of Persians and Arabs. You've got the difference of Sunnis and Shias. You've got a long history of, stated objective by Iran and its proxies that the complete destruction of Israel is their objective in life. So I think as the Saudi Arabias and the other Middle Eastern countries have, starting back last year when they, or in the spring, when they helped defend Israel, and we haven't heard yet how much they were involved in, this defense of Israel's airspace as well. But I think you've got more than, certainly in my knowledge, memory, of solidification of allies working anti-Iranian than we've ever had, which I think bodes well for the Middle East and for Europe and for the United States, because it's been a bonding effort, anti-Iranian bonding effort. And then as you've seen Iran, Russia, China kind of drawing closer together over the last couple of years, I think all that is positive from a standpoint of, if you're a Western culture or nation, saying we probably have more unanimity in defense of freedom today than we had 5 or 10 years ago.
Wow.
So General, if you were advising the United States right now, what would you say the U.S.'s role should be in the region?
US's role, it's our best role is to be able to create bonds, unanimity, alliances, even if they're only defense alliances. But certainly the Middle East has demonstrated over the last 5, 10 years that they desperately want to be more than just a fuel provider for the world. They want to have a legitimate business platform that is technology centric. And so all of these things are emerging at the same time. So the ability to bring the Middle East out into a stronger economic platform, the ability to further isolate Iran and its proxies, and the ability to leverage off of that a European tie into the Middle East that opens up economic opportunity that goes beyond just fuel, gas and oil.
Dan, I want to go back to you. You're there in Israel. I think some of the latest headlines that we've gotten was from the IDF saying no additional threats identified at this time. The Israel Homefront Command saying residents may exit shelters. Conflict in the region, going to a shelter is, unfortunately, it seems like a much more common occurrence, and something that's a way of life in the region. Having said that, is there nervousness, concerns that this is just not done from Iran?
Certainly, but again, the baptism by fire of Iranian missile attacks in Israel was already experienced back in April. So the Israelis weathered it. This was another round of that. As you noted, Israelis have shelters within reach, including in their homes, as a result of the 1991 Gulf War, which I imagine the general was involved in. Israel passed a number of ordinances requiring that new dwellings built after that war each come equipped with what they call a fortified room, effectively a bomb shelter in your house that can double as a dwelling space when there's no war going on. So Israelis literally have a bomb shelter to hand. They have emergency accommodation to hand. They occupy it on a daily basis as if it's normal. And then when need be, it turns into a wartime function. It assumes that wartime function. Again, I think Israelis would say that this is unpleasant. But given the fact that some minute or two after the all clear was sounded, I was already hearing voices in the street and buses passing and cars, it would seem that Israelis have actually learned how to rebound pretty quickly. And that may be one of the secrets to persevering, proving resilient, and perhaps even prevailing in this conflict. Though, as you noted, what victory looks like may be quite hard to articulate right now. In terms of the unpleasantness of a massive missile salvo, very unpleasant, I'm sure they would say, but Israel's proven to have a very capable air defense system with the assistance of allies like the United States, France, some Arab security partners as well, as we saw back in April. So for the time being, I think they're just ready to knuckle down and keep going.
All right. Well, we so appreciate both of your time today. Dan, stay safe. Bloomberg News reporter Dan Williams in Israel, and retired Major General Mastin Robeson, someone we've leaned on a lot in the past year. He's Geopolitical Intelligence Advisor at Academy Securities Advisory Board, joining us from Greenville, South Carolina.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, from one risk to another type of risk, and we're talking about shipping here in the United States. And the first dockworker strike on the U.S. East Coast since 1977. It began early today after an 11th hour boost in the employer's wage offer came up short. Union members hit the picket lines after midnight, container terminals closed, and Carol, auto shipments ground to a halt.
Yeah, absolutely. Gene Seroka knows firsthand about contract negotiations involving dock workers. He dealt with prolonged negotiations and delays and slowdowns in the movement of goods along the West Coast ports that finally resulted in a new contract just about a year ago. Gene is the executive director of Port of Los Angeles and joins us from LA. Gene, good to have you here on what is turning out to be a very, very busy day. First up, I am curious in terms of, I guess I almost want to ask you about the Middle East, because it is one of those big things when we wrapped up the trading year about a year ago, that when we talk about risks to the world, the investment environment, geopolitics came up. Before we get into the East Coast strike, I would love for you to weigh in on what is happening in the Middle East, and if at all you see any impact or concerns about maybe the outlook of your world.
Good afternoon, Carol and Tim, and you're exactly right. There are a lot of geopolitical influences on supply chain decision makers and have been for some time. Looking at the Middle East today, cargo ships are still rerouting around the Cape of Good Hope in Africa, avoiding the Red Sea with the Houthi rebels. Suez Canal receipts are down 80 to 90%, and there's no less than 4 ongoing conflicts. This causes great concern for the certainty of the supply chain and how you have to do reroutes and workarounds to keep commerce flowing. But our thoughts and minds and hearts are with the people on the ground, so making sure families are safe. So
layer on top of that then, the strike that we're now seeing on the East Coast ports, obviously not ideal for many, many different reasons. Are you seeing, first of all, increased traffic on the West Coast ports, your port in particular, because of what's happening here on the East Coast?
Yes, Carol, we started to see an uptick in cargo volume at the beginning of the year. People were a little bit concerned not only about a protracted dock workers negotiation, but drought conditions in the Panama Canal, in addition to those security concerns in the Red Sea. Our cargo volume is up 17% year to date, and we've had a very long peak season that began in June and still continues with some steam here now going into October. In fact, our third quarter ending yesterday is our best on record in 116 years.
Do you see that continuing into the fourth quarter, which starts today?
Typically, the month of October is met with the Golden Week holiday in China, formerly called National Day. We've got enough cargo still there at the major ports in China to profile our vessels next week. October will be strong. Then we might see a tapering off a little bit of the cargo volume, and that's seasonal, no more, no less. We're only in day one of this dock worker strike on the East Coast. No impacts on the ground that we see today, but the next 48, 72 hours will be crucial.
How do you expect, Gene, dock workers on the West Coast, in West Coast ports, to stand in solidarity with their counterparts on the East Coast? Will they refuse to unload freight diverted from East Coast ports?
We have not had any ships that are designated for East or Gulf Coast ports make a left-hand turn and come into Los Angeles. And we're watching that very closely because my experience says that that is sacrosanct between these two working unions. One will not take advantage of another's bargaining position and move ships around. What you have seen are cargo owners that try to hedge against occurrences like this and maybe put a little bit more of their allocation towards West Coast ports, including Los Angeles and Long Beach, that otherwise would have gone to the East Coast. We also saw that last year as our negotiations with the dock workers here with the ILWU went a little bit longer. than some experts expected. And we saw some of our discretionary cargo, that which goes to the middle part of the country, move to those eastern ports.
Yeah, I will point out that estimates from the National Association of Manufacturers show that the strike jeopardizes $2.1 billion in trade daily, and the total economic damage could reduce GDP by as much as $5 billion a day. So that's one statistic, I should say, that we are certainly reporting out. Gene, having said that, I think it's fair to say that there are a lot of folks maybe listening who have no idea what a dock worker makes, what a dock worker gets in terms of benefits, what a dock worker is probably fighting for. What can you tell us about that front?
These are well-paid six-figure jobs, but it's a skill set that's shared by few. The training and education that goes into these folks' curricula that to manage these big pieces of industrial equipment to move off all this cargo, very few and far between in the American workforce. These jobs are good for the middle class. In some cases, they're generational. Port cities like ours here in Los Angeles, around the enclaves of San Pedro and Wilmington, are built around these dock workers and families for generations. The economic landscape globally and in our shipping industry has changed dramatically since COVID. The last time that this dock workers group, the ILA, negotiated was back in 2019, before all these changes took place. The union is saying they need to keep up with the growing economic influence of the shipping lines and the profits that they've earned.
Gene, as Carol mentioned, you dealt with prolonged negotiations and delays and slowdowns in the movements of goods along the West Coast ports that finally resulted in a new contract. That was about a year ago. Given that, what would your advice be to your counterparts at East Coast ports who are going through the strike right now?
Yeah, a good question, Tim. Just keep everybody moving forward. There's a lot that's always said during negotiations. Blood pressure goes up. Folks get a little bit hot under the collar, but keep people at the table negotiating on these salient points. In this case, it's wage, automation or robotics, and the other work rules that are necessary. If we're apart, nothing gets done. If you're at the table, we can start chipping away at these issues. And the ports are typically seen as the convener. And I know that the White House is working diligently across several agencies to make sure these talks continue with shuttle diplomacy and just keeping chipping away at these issues. But as that natural convener and the good negotiators that they are, these ports can play a pivotal role in getting to a conclusion.
What's the smart conversation, though, around automation? Our Bloomberg technology team, I was listening to them earlier talk about the subject, and you just have the natural progression of technology taking over tasks that we all used to do by hand, or that you needed a human to do it. We know that just continues, especially in the past year and a half. We talk so much about generative AI, so many different things that are changing our world that now have been taken over by technology. So what is the smart conversation around that when you've got businesses that are potentially publicly held companies that are thinking about costs, and automation perhaps saves on that aspect? What's the responsibility of companies versus, towards their shareholders versus perhaps their workers?
Great question, Carol. And it's the most polarizing conversation in our industry. But two thoughts. One, our belief here in Los Angeles is that technology is never moving faster than it is today, but we cannot leave the worker behind. And secondly, when it comes to the automation negotiation between private sector interests and unionized labor, there are very few examples. Only 5% of the 360 ports around the world that are observed have some semblance of automation or robotics. 5%. We're a little heavier here in Southern California and honestly have seen mixed results. But there are examples where if we could peel back everything else, automation can create additional capacity at that marine terminal and port. We can also take a workforce and not have to just chop it down by 80%, as we've seen in some cases. If we can keep that workforce stable, double or even go beyond 2x capacity at these marine terminals, there may be a formula here that helps both sides tremendously. Now, we'll get into the time and duration of return on investment. We'll look at the types of skills that are needed, whether it needs to be upskilled and reskilled for folks who have been around for a while, or getting the technology training in place for the next generation of worker. In my experience, it doesn't have to be a zero-sum game. There's a skillful way to do this, and that's where I would be right now in these negotiations.
All right, we are talking with Gene Seroka, Executive Director of the Port of Los Angeles. I'm Carol Massar, along with Tim Stenovec here live on Bloomberg Businessweek. Do want to mention a headline crossing. The Israel police updating the number of dead in that Tel Aviv attack to 6. So we continue to get some headlines following the launch of missiles, ballistic missiles by Iran. But there was also another direct attack in the area in Tel Aviv. So we're starting to get some more details about some of the casualties in that. And
that one is shooting.
Yeah, that was
earlier.
a shooting. Yeah.
Gene, I want to go back to Gene Seroka joining us from Los Angeles. Gene, economists are still trying to figure out how much damage to a supply chain this would do, what the economic cost would be. Estimates range from $1 billion to $5 billion a day in delayed or lost activity as a result of this strike, as a result of these strikes. Given your perch, given where you are, I'm wondering how long you think this strike will go on.
Yeah, Tim, that's an estimate of the average amount of cargo value that goes through these ports on a daily basis. Not all of it is perishable in the most clear sense. If this strike is very short, couple, 3 days, there's the ability to catch up on getting this commerce out to the interior of the country, to the consumer bases across the eastern seaboard very quickly. It's when it becomes a lot longer than just these several days that if it turns into weeks, we'll have a very different discussion right here on this show. The other piece to this is that this strike will impact someone somewhere, guaranteed. So whether it truly is a fruit or vegetable that's coming up from Central America, or it's a specific product that has to be sold by a particular date, that may go away forever. And it's the stock out for the retailer. It's the order that an individual put in that may not make it in time for their consumer. That's what goes away as well. But it's just not a flat number of $5 billion a day that will be eliminated from the United States economy if we can get these sides to reach agreement in a decent amount of time. And I would say that putting up pickets across 14 major ports will motivate some more than ever to get to the table.
So I want to just go back to wages and just got 30 seconds here. My understanding is the most recent offer from the United States Maritime Alliance was for a 50% wage increase. The workers wanted, I think, more like 68%, but forgive me if I've got that number wrong. It sounds like a lot, and I think if somebody hears that, it sounds like a lot. In just 30 seconds, is it that their pay was so low, or is that a pretty aggressive request? And just quickly, if you could.
I think the pay was a little bit low in keeping up with the gigantic income level jumps that you've seen in the shipping industry. This is an affordable quotient, but there are details that have to be resolved.
All right. So appreciate all the time you've given us on this Tuesday. Gene Seroka, thank you so much. Gene is Executive Director at the Port of Los Angeles, joining us again from the West Coast, LA specifically.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's go to another part of the world, to Beijing right now. Usually he joins us to talk about China, and we'll certainly get to that. He also joins us to talk about India. We'll get to that as well. We've got with us Ben Harburg, founder and portfolio manager at Core Values Alpha. He joins us from Beijing. Ben, we'd be remiss if we didn't start with the situation that continues to evolve in the Middle East. Help us understand how you think what's going on in Israel, in Iran, will affect the economies of that area of the world.
We spend about half our time based in Abu Dhabi, so this has been an ongoing issue for us. It has been largely contained to date. In fact, we were actually surprised by how little contagion was felt across the GCC as a result of escalating tensions dating back to last October, with many of our global investors rarely even asking us if it had anything to do or any impact on our portfolio. And it just because it just feels like two separate worlds, kind of the Levant and Israel, Palestine, Lebanon, relative to this kind of more stability of the GCC, particularly the UAE and Saudi Arabia. But obviously, what's happened over just the last few hours is going to test that theory significantly. So TBD, but certainly historically contained and now potentially a significant impact.
The GCC, of course, being the Gulf Cooperation Council. And so we're talking about politically and economically the alliance of Saudi Arabia, Kuwait, the United Arab Emirates, Qatar, Bahrain, and Oman. So just for those who might be listening. So I do think about the way forward. It's been a region, an area with much conflict. And when we think about the Middle East, right, not every element of it, every country is the same. So I just do wonder, as, I don't know, I think about the Bloomberg audience trying to understand their way forward and what impact this will have on them. How are you thinking about it?
Well, again, the economies certainly are not that interrelated, and particularly places like Saudi Arabia, we've spent a lot more of our time spend their whole day buffering themselves against Iran. Obviously, trade had begun to flourish, particularly with the UAE and Israel after the signing of the Abrahamic Accords, and obviously we were looking like normalization of relations with between Saudi Arabia and Israel was just around the corner. That's obviously been shelved. So it certainly is going to hurt regional cohesion indefinitely. And I think there's the fear is that there's some spillover. We had actually Houthi rocket attacks that hit Abu Dhabi very quietly a year and a half ago or so. And so there's kind of that fear that a stray rocket might find its way towards one of these stable markets like the UAE and Saudi Arabia, and that could really start to spook people. But historically, again, it just feels like two separate planets, even though in true proximity, it's not that far.
But safe to say that, and to be fair, about a year ago when we started talking about, or obviously the Hamas attack against Israel specifically, we had a lot of conversations about how many attacks there are around the world within the Middle Eastern region, or by proxies of various Middle Eastern counterparts. But this feels like something different. Am I right in saying that, or no?
Even within the kind of Arabian Peninsula, there's been instability, and over the last years, particularly emanating out of Yemen. In the GCC, we were impacted, for instance, by the blockades on the Red Sea side. And so it's a funny part of the world that's kind of able to absorb blows and keep moving. Again, perhaps particularly the kind of northern, more stable markets in the UAE, Qatar, Kuwait, et cetera. So it's somehow against all odds kind of keeps on chugging. And to some degree benefits if oil prices spike from that, particularly the UAE, Saudi Arabia, Kuwait, Qatar. But overall, I mean, this is a new escalation, and just certainly there are a lot of relatives of folks that are sitting in Palestine, that are sitting in Beirut and elsewhere. So you're feeling it day to day, but the economic impact had not been felt. We'll see how the markets react now to this change.
We talk about stability, right? When we talk about geopolitics, I want to go to China, which is something we talk to you a lot about. And it does feel like over the last week or so, a couple of weeks, where every day or several days, the most read story on the Bloomberg terminal would be about some new leg of Chinese stimulus to help get out of the real estate malaise, to prop up the financial markets, the equity markets in particular. When it comes to China, does it feel more stable at this point?
Stability was never really the fear we had. It was convincing global investors of the Chinese government's secular intent to grow the economy and to fix what was ailing it, and to kind of assuage a lot of the fears that global investors had. Because we're all sitting looking at the market kind of just beside ourselves on the fundamentals. You have companies that are growing double digit, valued at 1x or at single-digit PE relative to their U.S. peers who might be trading at 30 or 40%. You've got companies valued with the kind of the cash that's sitting on their balance sheet. And just fundamentally, none of this made sense. But it really came down to trust and global investors feeling that they couldn't put money in China and that the U.S. was in any way outperforming it just because of that trust being broken. This raft of stimulus that we really, even those of us sitting on the ground in Beijing, didn't anticipate this scale and this kind of continued momentum has really changed that narrative. And it's created a virtuous cycle where individual and retail investors in China who have been sitting on the sidelines with 31 or 21 trillion dollars of household savings are finally starting to emerge from their caves because they're seeing their equity values improving finally.
Hey, Ben, we have 2 minutes left, and I want to give you some time to talk about India because you guys are pretty bearish on India. Help us understand why that is.
I'm not a casual observer in India. I lived in India before. I did business with India, including many of the folks that are now leading the economy, the Reliances, the Adanis of the market. I think it's a market that has obviously seen huge interest over the last couple of years, particularly owing to capital flight out of China and an interest in finding kind of a market that is democratic, is more Western aligned. And so it kind of has been an easy a narrative to go to. But the reality is when you really spend time there and you really dip beneath the surface, you find one that is hugely and overly bureaucratic, where the government often gets in the way of private business, one that's often constrained by what I would kind of label crony capitalism, one that has had just a pockmarked history, particularly in recent years, of financial scandal at the highest levels. I mean, if you had a scandal on par with Gautam Adani's recent financial scandals in China with Pony Ma, the kind of richest man equivalent, it would be screaming headlines around the world. And India got a bit of a pass on that front. And from a technology perspective, we're venture investors. Two of the top three biggest venture-backed companies that are still private today in India had huge demises, that being Oyo, kind of their hotels tonight, Airbnb equivalent, and a company called Byju's. So it's been just kind of a raft of challenges.
Well, listen, we went around the world and we so appreciate it. And we know it's the middle of the night for you. So once again, thank you. Ben Harburg. He's founder and portfolio manager at Core Values Alpha, joining us once again from Beijing.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just under 18 minutes left to go in today's trading session, bouncing around. Certainly markets reacting to the news out of the Middle East, but we've seen some recovery, certainly on the equity side of things. But we did see for a while a bit of a safe haven bid. So we did want to get to it with our next guest. Back with us is Doug Ciocca.
Yeah, Doug, good to have you with us. Doug, CEO and executive partner at Kavar Capital Partners. They've got about $1.35 billion in assets under management, joining us once again from Leawood, Kansas. Doug, I thought today's market reaction was market's not closed, but has been really interesting given, as we heard from Bill Maloney and Carol just now, we're well off our lows of the session. Was it almost like investors anticipated a bigger escalation than what we saw from Iran, Doug?
Feasibly, Tim, I think that would not be a bad way to capture it, right? It's hard to put an economic calibration on the human and emotional toll, and it's incredibly sad, right, that the market has almost become conditioned to incorporating instances of armed conflict around the world, right? In many respects, it's found a way to manage through it, focusing more on the long term than the shorter term impacts. But like Charlie said, haven trades certainly still in effect, even though they're off their highs. Gold, defense stocks, oil bonds, Bitcoin seems to be sitting this one out. I'm not sure if that's a haven asset or not. The VIX got up to almost 21, now back to around 18 and a half. So yeah, it's been kind of a boomerang session for sure.
And, I feel like in general, we tend to have a very reactive market, whether it's earnings news, whether it's Fed narrative, whether it's out of the Middle East. I'm not sure whether that's a more efficient market that reacts. And if things get bad again, things go down or things react. I don't know. How do you see it? And then how do you invest around it?
Yeah. So Carol, it's interesting, right? We kind of look at the market as somewhat of an AI tool in and of itself, right? I mean, it kind of is its own iterative large language model, right? It incorporates the collective wisdom, emotion, intelligence of its participants, and it does it in real time, right? It modifies its valuation, its return stream, and it's why, in many respects, in my opinion, 10% drops right now get hit so hard. Right, that within 2 years of them happening, this is fascinating. The market's higher 95% of the time. Within 5 years, it's higher 100% of the time going back to 2010. It's probably also why there are considerably fewer 20% drops in the last 30 years than in the 30 years prior to that, and also why bull markets tend to run well longer than they would in their historical averages. Again, going back some, let's say, 30 years. Negative sentiment tends not to go as deep or run as long when there's better access to empirical and not just anecdotal information, and it's reflected more readily in prices and valuation.
So good or bad?
I think it's great.
Yeah.
And if you think about today, right, obviously the most important thing being this Iranian bombing of Israel, but you also have the port strike.
Yeah.
You also had yesterday a less than uber dovish Powell in his commentary down in Abe in Tennessee. You had a report about a production slowdown of iPhone 16s this morning. You have a vice presidential debate tonight. It's like a buffet of concerns culminating at a time when I think, right, yesterday we arguably had some quarter end window dressing. We had the 44th all-time high in 2024. We have a lull before Q3 earnings reports. It's a pretty combustible environment, but it's not really resulting in much more than a small pullback because underlying conditions for optimism are really strong, right? Still dovish Fed, full or balanced employment picture, China stimulus, which is going to have far and wide positive ramifications, and lower inflation.
Okay. So, you have something to say, Carol.
And yet, initially, when Tim and I were prepping for our broadcast and our conversation with you, this was prior to the headlines and the activities out of the Middle East and the conflict escalating out of the Middle East. I had a lead into you that said B of A, Bank of America clients were big net sellers of U.S. equities last week.
It was a good lead, I thought, Carol.
After posting near record inflows over the prior period. Institutional clients selling for the first time in 2 weeks, hedge funds for the first time in 4 weeks, and retail investors for the third consecutive week. That was going to be my lead. So I'm just curious, are investors just banking profits at this point? Was it end of a quarter? End of a, what? I don't know. What are you seeing in terms of flows?
Well, we're seeing similar. I think that all of those things conspire to lead people who wanted to potentially move a little money off the table. Obviously, there's always something called into question about the sustainability of EPS growth. But EPS growth has been the fuel of the market's fire, right? And it has been not only dependable, but it's elevating. Right, from whatever 9% in 2024 going to 13% in 2025, 16% in 2026. If that all happens, right, now let's say that S&P just stays on trend and goes up 20% between now and the end of 2026, which takes to like 6,900. If we're at $320 a share, that's 21 times earnings. And guess what? Fed funds is going to be under 3%. So I don't really get the motivation to move a lot to the sidelines. I'll tell you what I found fascinating this morning by one of your colleagues, Alice or Elise Andres, who writes for the morning Bloomberg Live blog. She had the greatest encapsulation of what's happening. She said U.S. stocks have the benefit of a Federal Reserve that's voluntarily and actively easing monetary policy. Voluntarily is critical because the data is irrefutable. If the Fed is cutting and the economy is not shrinking, meaning we don't go into a recession, and the 7 of 7 times it's done so since 1970, 3, 6, and 12 months later, the S&P has been higher, and on average 12 months later over 16%. So that's a 100% hit rate, not a prediction, just perspective. And the economy is not slowing, right?
Wow. Yeah, no, that's a good point.
Well,
hey, go ahead.
Which maybe speaks to why Larry Fink doesn't necessarily think we need so many rate cuts. I mean, the question is too that, Doug, and you probably heard it on Bloomberg, and we've only got about 25 seconds left, is then, okay, if things are so good, why did the Fed need to do a 0.5 point cut? Real quickly, your thoughts.
Yeah, and I agree with Larry Fink. I think the market is ahead of itself, and I think it likely will make a modification of that enthusiasm. But I think it was a pivot in the focus of the dual mandate. Inflation is under control. I think it's very dovish. They're willing to let PCE go at 2.3, 2.4 as opposed to 2.0.
Yeah.
But I think because of the focus on the job market, they're going to try this live experiment of being a little preemptive, cutting a little bit quickly early,
right,
and then making those decisions more on a data-dependent basis.
All right, got to run. Good to check in, as always. Doug Ciocca, CEO, Executive Partner at Kavar Capital Partners, joining us from Leawood, Kansas.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.